The United States of America, the richest nation on earth and the birthplace of capitalism, is on the verge of becoming bankrupt. In this graph you will see the debt of the US government. As you will see, this debt has grown steadily, and now exceeds $31 trillion, that is, 31 followed by 12 zeros. To put this debt in perspective, consider that it is roughly 25 times larger than Mexico's economy and nearly twice as large as China. In addition, even if interest were not charged, the US would need to stop spending on its military for 40 years in order to pay off this debt. And although the debt continues to grow, this debt reached its legal limit in January 2023. Yes, the amount of money the government can borrow is legally capped. The deadline will arrive in June 2023, and Congress will need to modify the law by then or risk becoming bankrupt, despite the fact that the government has significantly reduced public spending to prevent bankruptcy. If you are knowledgeable, you are aware that the annual debt ceiling debate, often known as the debt limit issue, makes the news. The United States is supposedly on the verge of bankruptcy if the ceiling isn't raised. And while the Republicans and Democrats have previously come close to bankrupting the nation over their differences, this time around looks a little different, and the likelihood of bankruptcy is greater than ever. Why is the American government accruing so much debt, and what would happen if it actually declared bankruptcy, are the two key questions at hand. We will address all of these concerns in this video, and I will provide a clear explanation of how the US debt operates. Understanding government finances is a prerequisite to understanding US debt. A government has expenses as well as revenues, just like you and I or a business. The government expenses you'll see here. Those are mostly pensions, medical expenses, unemployment, but also the military. And since the government is of paramount importance in the economy, without these expenses the US economy would cease to function completely. Unfortunately, these costs are increasing as a result of politicians' new ideas and initiatives, as well as the fact that more and more people are depending on government assistance. But these are the costs they incur. The government has two alternatives for covering those costs: increase taxes or take out a loan to raise money. And here you will see how much money the government raises through taxes. As you will see, the government only collects $4 trillion, while it spends $6.8 trillion. In other words, there is a deficit of $2.8 trillion. Therefore, the government would have to raise taxes by at least 50% in order to balance its budget if it decides to go that route. This is not going to happen because taxes are already so high, as you can guess. As a result, the government is forced to issue debt in order to pay off the deficit. And that explains why the US debt has been rising steadily over the last few decades, as you will see in this graph. With each passing year, the deficit has to be covered with more debt. And here I want to show you how serious this problem is. Here you will see over the last 50 years the US deficit. The United States has been running a chronic deficit that is only growing. The only years where the government had a surplus was between 1998 and 2000, and believe it or not, this was under Democrat Bill Clinton's administration, not a Republican administration. In any case, the crucial query is, from whom does the United States government borrow? The Federal Reserve, which prints the money, has the answer. Yes, a dollar is only a piece of paper printed by the Federal Reserve, as you may already be aware. The United States government issues a government bond whenever it needs money. The amount borrowed, the rate of interest, and the duration of the obligation are all specified in this bond. The US government then sells this bond to the Federal Reserve, which subsequently prints the money and gives it to the government. But the government now does this routinely. Each time there is a deficit, the government borrows money to make up the difference. However, the current significant issue is that the debt is so large that the government must borrow money not just to fund the deficit but also to pay interest on the loan. Because of the vicious cycle created by this, the debt can keep on increasing. Legally speaking, however, this debt cannot continue to increase indefinitely. There is a debt ceiling for the United States government. This cap was put in place to prevent excessive spending by politicians that would bankrupt the nation. As you can expect, loans eventually need to be returned, along with interest. And the United States government achieved that debt ceiling on January 19, 2023. Despite the fact that technically the government can no longer incur debt, decision-makers have devised means to maintain liquidity at least through June 2023. They achieved this by reducing the expense of a few pensions and other benefits. If you are enjoying this video and want to be aware of new videos, subscribe to this channel and turn on notifications. Therefore, the government must start reducing its debt by June or raise the ceiling so that it can incur even more debt. Since it is obviously impossible to begin paying off the debt with present expenditure, they will attempt to increase the limit. But this is where the major conundrum arises. Democrats and Republicans need to reach a compromise in order to raise the debt ceiling even further, but as you are aware, this is like mixing oil and water. The Democrats, who want to continue spending even more money on a number of projects, are on one side. Republicans, on the other hand, want to annually reduce expenditure and public assistance. The result is a battle between these two parties that puts the nation on the verge of becoming bankrupt. But politicians typically reach a consensus. In other words, the Democrats are successful in raising the debt ceiling in exchange for something favorable to the Republicans. The challenge of increasing the debt has thus been turned into a political tool by politicians. Deals are always made, but the nation is increasingly on the verge of going bankrupt. And now in the year 2023 the situation seems to be different, and the risk of bankruptcy is more real than ever. The reason is very simple: these two parties, Democrats and Republicans, are in a disagreement never seen before. The two parties are more divided than ever, as you may have heard in the news. Additionally, the Democrats currently have plans to increase the debt to unimaginable heights. Renovating America's infrastructure, relocating microchip production from Asia to the United States, and spending on education are a few examples of the ambitious spending they have planned. Republicans generally oppose all of this and think that the government shouldn't interfere with the economy. As a result, there is more at stake in this conflict between the two groups. The U.S. will in fact declare bankruptcy if the debt ceiling is not increased. This means that by June 2023, the government won't have enough money to cover debt interest as well as salaries, perks, and welfare. The legislation states that this insolvency would result in a bankruptcy filing by the United States government, which would result in a complete cessation of all federal payments. And now the important query: what would occur if the United States declared bankruptcy? As I previously stated, all payments made by the U.S. federal government would end immediately. This covers both the military's pay and the salary of civil officials. In addition, all public benefits, including pensions and unemployment compensation, would end entirely. Government spending has a significant impact on the American economy, so if it were to entirely slow down, the financial markets would be the first to feel the effects. Investors holding U.S. government bonds, such as those in China or other European nations, would sell them as soon as they realized the debt was worthless. In addition, the stock market would utterly crash as a result of the U.S. economy's catastrophic slowdown, plunging the entire global economy into oblivion. As a result, as you can see, the effects of such a bankruptcy would be disastrous, and the adversaries of the U.S. government would seize the opportunity to do so. Obviously, politicians won't allow this to happen when faced with such implications. In the last few decades, the debt limit has been raised more than 89 times, as you will see in this chart. And believe it or not, Republican administrations have raised it the most. Therefore, it is nothing new that there is a fight about the debt and that politicians threaten to bring the nation to its knees if their ideas are not supported. They always come to an agreement while knowing they are playing with fire. The country's bankruptcy is ultimately not in the interests of anyone. Therefore, despite being further apart than ever, I think Washington's political leaders will come to a compromise. They may wait until the last minute, as they have in the past, but they are aware that the results could be catastrophic. However, given that politicians will be in negotiations and issuing more threats, it is very likely that the financial markets will be extremely tumultuous in May and June of this year. One thing, though, is quite evident. The American debt is out of control and is rising. Every time debt increases, the value of the currency declines and inflation increases even more. What do you think? Leave us your opinion in the comments. Thanks for watching the Money Street, And don't forget to click the subscribe button for more financial videos.